Live. You guys are listening to another episode of the Wholesaling Syndicate podcast. I'm your host, Kai Logue. Very excited to have the special guest we brought on today, Alex Coffman. Alex is someone I want to connect with for a while, so I'm happy we're finally able to do it on the podcast. But Alex, thanks so much for coming on today, man.
Yeah, thank you. I'm excited.
Same here, man. Yeah, I've heard nothing but great things about you. Yeah, I love your partner, Matt. Definitely one of the coolest people I've met in real estate, and definitely a go-giver and speaks very highly about you. So I'm happy we got to connect.
Yes, sir. Me too. Everybody, I've never heard one person say a bad thing about Matt.
Yeah, I don't know how you could, man. He's just so likable and super nice, and yeah, it's a good guy all around. Just great energy. But awesome, man. So yeah, just to get started, if anyone in my audience might not know who you are yet, do you want to give us a quick introduction on who Alex is?
Sure. Alex Coffman, out here in Austin, Texas. Quick short story. I mean, really what we're focused on right now is investing in bigger commercial real estate assets. Matthew Typke, my partner, we own a real estate brokerage here in Texas, but mostly here in Austin. But we have some agents in San Antonio, DFW, Houston, some in Corpus, but majority here in Central Texas. And our big focus has always been making money in and on real estate. We found a lot of opportunity within the real estate brokerage, sector of that to really cultivate an environment for deal finders and doing deals. We're probably much different than most real estate brokerages, where we tell you probably the least valuable thing you could do when you find a motivated seller is get a commission on it. You should always be exploring how you can wholesale the deal, buy the deal, buy it subject to structure seller financing, start building your net worth. But we've done a lot. We've wholesaled right now about 230 doors, single family, 2 to 4 units. We closed on a strip center in Florida earlier this year, RV park in DFW, some smaller commercial family, some smaller commercial multifamily, and we have a fund. We raise capital. We do kind of a lot of different things but right now what we're really focusing in on is meeting more investors and buying more deals with our investors.
I love that, man. That's awesome. Yeah, definitely want to kind of dive into some of the cool things you guys are doing. But before we do that, kind of give us a quick background, like your story, how you got into it, and what the journey's been like getting all the way to 200 doors. I mean, and doing the funds and all the other cool things you guys are doing. What was it like when you first started out?
Yeah, I was talking about this last week. I mean, I've always been very entrepreneurial. When I was younger, it was in not so productive and in legal ways. But I turned my life around about 9 years ago and was looking for legal businesses to start. How was I going to, I've always been investing my money. So how was I going to invest my money and get it to multiply for me, in something that I wasn't going to get arrested for? And, was looking at different things. I started a company with a friend of mine when I had first gotten sober, called Addiction Management. What we did was interventions and peer recovery support coaching and transportations for treatment centers for people who are struggling with alcoholism and addiction. And I found that I didn't really enjoy working in that industry. My morals were in constant conflict with the business side of me. And so around that time, Matt and I reconnected. Matt and I have known each other for probably 23 years or so. I grew up with his younger brother, and we were connected on investing, and we're, investing in stocks parallel at that time. And Matt was obviously in real estate. I had been, studying real estate and listening to podcasts and reading the books and everything. And Matt kind of pushed me over the edge and said, come buy this house with me. I found this deal, buy it 50-50 with me. And that's where it really started. Was we bought that first single family home here in Austin in 2018, 17 timeframe, and really just, took off from there. But back in that time, my goal was probably like buy one house a year or something for the next 30 years.
Hmm.
And I was talking about this last Friday at a networking event we had, was just that looking back, I mean, we did what was necessary to build to where we are today, and with the available resources that we had. But in my opinion, we were thinking way too small. You know, bought that first deal, then we bought like a triplex and an eightplex, then a duplex, and then many more single family homes and a whole bunch of smaller stuff, and amassed this large portfolio of 2 to 4 or 1 to 4 units. But looking back, if I were to do it all over again, I probably would not have gone that route. I
Mm.
probably would have started thinking a lot bigger, a lot more sooner, because raising capital, buying deals with more partners and investors, and buying the bigger deals, um, they're a lot easier to manage. There's a lot, if you buy them right and manage them right, they're a lot easier to make a lot more money doing them that way. They can actually afford all the expenses. They can afford the debt. And the smaller stuff, at least here in Austin, we definitely get a lot of appreciation, but it's very hard to make those smaller deals cash flow.
Right.
And even if you do get a little bit of cash flow, which is unlikely, it's gone after an AC unit goes out, or water heater goes out, or you're vacant for 60 days longer than you thought you would when the tenant moved out, or the make ready comes, right? So, it's been a journey, and we've learned a ton, but it's been a grind, and we have a really nice big portfolio. However, looking back, if I could have, done it a different way and thought a lot bigger, I think that would have been a better, quicker, faster route for us.
Yeah, I love that. And yeah, man, thank you for sharing your story. I went up to you and Matt's event, I think last year. At some point, I forget which one it was, but yeah, I went up there to hear a bit of your story, and Matt kind of shared a bit with me too. And yeah, very similar background here. And I love that you're able to turn around, and that real estate's been such a great vehicle, and you guys are crushing it. I mean, it's so cool what happens when you link up with the right people and find the right vehicle.
Yeah. Thank you, man. Appreciate it.
Yeah, of course. So yeah, man, I love that. So it's funny because yeah, most people think the smaller deals would be less of a headache, less management. So let's kind of dive into why the bigger deals actually are less of a headache, like you mentioned, and why the numbers make more sense.
Yeah. So I think the big thing is that we're kind of, no one's really teaching you this, right?
Mm.
There's a lot of stuff about residential deals, and when you're just starting out investing in real estate, or deciding to explore investing in real estate, you might not think that it's possible to go out and buy a $10 million apartment complex, or a $7 million RV park, right? And I think that's why a lot of people obviously get started in wholesaling as well, is because risk is real low. It doesn't require a whole lot. You don't have to go get a loan, all these things. But everybody's, goal for the most part who's getting into real estate is to be wealthy and to live off cash flow. And so it just comes from experience, right? Like that first deal that I bought with Matt, I remember thinking like 6 months later after we bought it, like, where is all this cash flow
Yeah.
that I'm supposed to be getting? And I quickly learned that with the types of properties that we were buying, and with debt on them, it was almost going to be impossible to cash flow on them. And I've had conversations with partners on deals that we bought shortly after that. Like, when am I going to get? When are we going to start expecting this cash flow? And it's like, well, it's not coming. The cash actually flows the other way. When property taxes are due, we're gonna have to put money into this account. When it's vacant, we have to pay this make ready, we're gonna have to put money into this account. The cash is flowing the opposite way. And it just comes from all the things, right? Like, your debt is really expensive. The rents here, I mean, even at the 1% rule, which everybody goes by, it's still probably not going to cash flow much, with unexpected expenses. And then there's a lot of expenses that you don't consider when you're analyzing these deals, such as a bookkeeper expense, such as a QuickBooks account expense, such as the CPA expense to file your tax returns. That adds another, $2,000, 2,500 on top of, all the other operating expenses that you have to operate the property. And, I'm sure that it's possible in some of these like 2% rural markets. But, when it comes down to it, and maybe you make $500 worth of cash flow a year or something, like, is it really, what are you going to do with $500? Is it really worth your time and the investment for that? But in the other markets, such as Austin, we did gain a ton of appreciation and we bought all the deals correctly. But the only way to capitalize on that is to sell the property or get another loan and pull the equity out. But the bigger deals, like, for example, the strip center in Florida that we bought, it was valued around somewhere around like 1.7 million. We bought it for 1.45 million. We put down about 300 grand for the loan. The loan's at about like an 8.25% interest rate, which is not great, but it is what it is. It's okay for right now based on the property that we were buying. But the big value of this strip center was the ability to raise the rents. So all of these tenants were on annual leases. The owner kept them on annual leases. He wasn't charging back the triple net expenses for taxes, insurance, maintenance, some of the utilities. He was taking those on himself. And I guess he started doing that during COVID and just never transitioned it back to where the tenants were paying for it. And so this was a motivated seller. He found us from our website, and we had the ability to go in and raise the rents about 30-40% within the first 6 to 9 months based on the renewals that are coming up. So it's just a simple math formula, right? Like, the residential properties are valued based on the residential property that sold next door to it, right? The house that meets the same floor plan, same square footage, same condition, etc. It's based on those comps. Well, with these commercial real estate properties, it's valued based on the NOI. Now, there is some value in the land and the improvement, but the value that somebody is buying into is the NOI that they're going to get, which is, their return. So when we were able to go in and raise the rents on this strip center by their current NOI was at like 135, and we raised the rents by about 55,000. When we raised the rents by just getting renewals signed by the tenants up $55,000, we increased the value of the property by about 785 grand.
Wow.
Right? By simply going, hey, Kai, you're coming up for renewal. You're now responsible for these expenses. Here's your new lease. And you sign, and then boom, $785,000 worth of value created like that, which would have been, it would take, I don't know, 30, 50, 70 years to create that value with, a $200,000 single family home that we're renting out.
Yeah.
Now, what's also cool on it too, though, is that the only expense that we have for these properties for that property is the management. So we are paying the manager like $1,500 a month to manage the property, but everything else the tenants are paying for. They're paying for the taxes, the insurance, the maintenance, and it's pure cash flow after we receive all the rents and pay the debt.
That's wild. Yeah, it definitely beats that $500 a month from the other scenario.
Well, $500 a year, maybe
a year, yeah.
In a best case scenario.
Yeah, that's wild, man. That's super cool. And looks like we got some comments coming in too. I appreciate you guys. If you guys have any questions, make sure to drop them in the comments, and we'll make sure to get them answered for you. So we have my boy Adam Pond. What's up, Adam? We got the CEO on YouTube. He said, that's my boy, Entrepreneur Gang. I'm guessing our entrepreneur. I guess is one of your people. We got Lucky. What's up, Lucky? What's up, Alma? appreciate you guys. But yeah, you guys have any questions, just drop them. We'll get them answered for you. But man, I love that, man. It's super exciting. What are some of the biggest misconceptions, people have about commercial, and what do you think holds them back from trying to dive into commercial?
I think the biggest misconception and the biggest thing that's holding them back and held us back is we're not thinking big enough.
Mm,
You think that it's the same reason people don't get into real estate in general. Number one, right? Like, I don't know if you experienced this on your social media accounts, but for years when we started putting out like content showing like making 700 grand on a wholesale fee and things like that, people all over Facebook just straight up hating on it. And
mm,
what it comes down to is these people, it's actually really sad. These people don't believe that it's possible for them, right? Like,
right.
oh, it must be nice to have daddy's money, or it must be nice to come from a trust fund, or
Hmm.
what, all these things that aren't true. But like, these are the things that they think in their head. And so a lot of people, number one, just don't even think that it's possible for them. They feel like this is only something that's available for the wealthy and people who have money and all these things. But then, so that holds a lot of people back. But then, even people who are in real estate, they don't understand how they can put a deal like this together, right?
Mm,
I hear a lot about like, well, I can't qualify for a $10 million loan, or I can't, come up with $2.5 million down to buy this property, or I don't have the experience. It's all just limiting beliefs that everybody has, and fears and fear of the unknown. And, uh, it's just self-talk, right? But it's actually really simple to do. You do need partners, unless you do have the capital to put it up, and you do have the balance sheet to sign on the debt. Then you absolutely do need some partners. But that's real estate. It's a team sport. You need people to do deals with. And so it's actually pretty simple to put this stuff together with the right people, with the right investors, and knowing how to find the right deals. It's all possible. You just kind of have to get through and pass that hump of it's not possible for me, or Facebook user just said they don't believe it can happen. But it absolutely can. You just need to put in the work to make it happen.
100%. No, I love that. And I think it all starts with mindset. I think that's the foundation, because, I used to be someone who thought like that. And, growing up without any money and, kind of struggling, I'm like, I always thought, you had to, go to college, you had to have rich parents and all those things. And it's almost like, these people, like, I feel bad for them. It's not their fault. It's like, you're pre-programmed by, society, the media, whatever, just to think these things. But I feel like once you start to get out of your comfort zone and you start to see what's possible, you kind of start to stretch, and you start to realize, really, if you can think it, you can do it if you're just willing to put the work in.
Absolutely. It is. It's really sad that, and everybody grows up in different ways in different neighborhoods and different parts of the country. But it is really sad how society, or where they grew up, has the media has pre-programmed them to think a certain way, which is negatively about themselves and what's possible for themselves. But it is all possible, and you can go accomplish anything that you set your mind to. Now, it requires hard work, and it requires hustle, and it requires sacrifice and all those things, but it doesn't mean that you cannot achieve it.
100%. So what was the first deal for you? I know you said that first deal is kind of, you weren't getting the cash flow. What was the first deal for you when you got into real estate that kind of opened up your mind to what was possible?
Um, I don't know. I mean, I've been thinking about this for a long time. Uh, you know, Definitely that I mean, prior to even buying that single family house, I was looking at buying apartment complexes. So I was thinking about this for a long time, but it was more so the way that we set up our environment, in my opinion, that kind of facilitated keeping us small. So we set up our entire environment to feed us these smaller deals. We set up our entire environment to have the resources and the connections to facilitate doing these smaller deals. All the relationships that we were going out and building was facilitating the smaller deals. So it's not that it one deal necessarily opened up my mind, because I was always thinking about this, but it was more so the way that we set up our business and our environment and our systems for everything that facilitated keeping things small.
Mm,
And the moment that we opened those up, larger to facilitate doing the bigger deals is when the bigger deals started becoming possible. So I always knew that it was possible. I always knew that we wanted to go here, but the moment that we changed our environment to open that up is when things started happening more and more. But it also came with a lot of frustration on owning a lot of the smaller deals too, of just being fucking pissed off every single month, having to take money out of my pocket and put them back into these properties, And so it came with a lot of that frustration where I probably finally just said, screw this, we're not doing it anymore. The only deals we're buying are deals that can also, give us a lot of that appreciation, but also sustain themselves and give us cash flow on a monthly basis. No more single family deals, no more duplexes, no more quadplexes, no more eightplexes. And we've kind of gone through that process over the last 12 months or so. And I know that it's probably caused some frustration to my partner, Matt, where he's like, dude, let's buy this eightplex in Corpus. And I'm like, no, it won't do anything for us. It's going to be a headache for us. Our entire track record shows that this is the case. We're not buying it. We can try and wholesale. Let's try and make some money on it, but we will not buy this thing. Or if you want to buy it, go ahead. But I want zero part in owning that asset, And we had to pass up a lot of these deals over the last 12 months to, on the search for the bigger and better ones to get where we are and where we're going. And, 5 years from now, I'll probably look back and be like, when I was talking to Kai on that podcast, I was thinking way too small, So it's going to be an evolution over time, I imagine, but that's kind of, how it happened.
I love that, man. I think that's great. So let's dive into that. I'm guilty of this myself of, just focusing on residential and focusing on the smaller deals. I guess I'm trying to think of some of the limiting beliefs I have or things that hold me back, but I guess one, maybe it's complicated or too complicated, or I don't know how to evaluate it. So let's go into like evaluating the commercial deals. What do you look at? Like what's most important to you when you look at a deal? If you come across something, how do you know it's a deal? And then maybe just speak on that.
Yeah. So it comes from same tactics that you would use with residential deals or 2 to 4 units. You got to know the market. In that market. We still live?
Yeah, I think it just froze up for a second, but yeah, I think we're good. Yeah. So you said last thing I heard was you got to know the market.
Yeah, so it's all the same tactics, right? Like you need to know what rents are going for. You need to know what single family houses are going for. You need to know what the price per door is going to be for apartment complexes. You need to know your cost of operating this property. What is management going to cost you? What are taxes going to be? What is insurance going to be? All of these costs that are associated, the cost of debt. But it's a very simple formula once you do that, right? You got your rents, your other income of application fees, late fees, pet deposits, pet rent, all that stuff. You have to subtract your vacancy, right? So your occupancy, what's it going to stay at? 90%, give or take. Then you subtract your operating expenses from that, and that gives you your, net operating income. And then commercial deals typically trade by a cap rate, which is a capitalization rate. And all this is a relationship between NOI and sales price. And so you should learn that, what it is for certain assets in certain markets. Like in Austin, sub 5, probably 4.5. When the interest rates were really low, it was probably closer to 3.5. San Antonio, it was probably closer to 6 or less when interest rates were lower. Now maybe 7.5. Corpus Christi, 7.5 to 8.5, give or take, right? And so learning what value these are traded at will also help you establish a value, but you can come up with a value in a property in 30 seconds or less just by running a very simple math equation. Now, there's other things that are important too, though, right? Like for deals that we're buying, we're not buying strictly based on a cap rate. We want to buy in a good location, buy a good property that doesn't need a ton of work. we're looking for the ability to add value, just like we did with that strip center, by increasing the NOIs where we created, that $785,000 worth of value for the next person. And so we're looking for the ability to raise rents and increase the NOI so that the value of the property increases. We also want to underwrite it and make sure that the debt can be serviced by the NOI, and then that the cash flow that we're getting after all of that stuff is going to be able to be, good enough return based on the cash that we're putting in the property. And also, you need a good team, right? Like, this kind of plays into the location, but you don't want to buy a property where you're not going to be able to get a good management company. Because if you got a bad management company managing it, then it's going to, ruin the deal and diminish all the returns that you would otherwise get.
Yeah, no, that's super helpful. So going back to the, knowing the market, knowing the data, if someone's brand new, if they're in a different market, and where would they go, or are there any tools, or, how should they start to do that research to try to learn what's what in the market?
Ask me one more time. Sorry.
Yeah. So if somebody's brand new, and they're in a different market, and they're trying to figure out, what the average numbers are, what the average cap rate is, what all the numbers, everything you said they should know, where should they go to learn those things?
Yeah, there's a lot of free resources out there, but really it comes from meeting people, talking to people, and learning the market that way, right? Like, sure, with the residential stuff, you can go on the MLS and learn it that way, or Rent-A-Meter or Zillow, things like that. You can do that as well with commercial deals. If you want to pay for a software like CoStar or Reonomy or Crexy or something. But the real market knowledge, just like we know, doesn't come from the MLS or the softwares, but it really comes from you going out there and talking to players in the market, right? Talking to the brokers, talking to other investors, talking to the lenders, and getting real live market info based on what people are looking for, what things are going for, and where things are at. And so my biggest piece of advice would be, don't get lost behind a computer, but go out, start talking to people, start meeting people. And a way that you can do this is just go to, you're probably not going to find a lot of deals on here, but you can find a start to some connections here. Is go to loopnet.com, which is a free commercial real estate listing service. And just search for multifamily in the city that you live in or that you want to invest in, and click on these listings. And these listings all have brokers. In my opinion, and my advice would be to call these brokers, get them to send you information on this deal, tell them what you're looking for, and start to build a relationship with those brokers. Because you need to start meeting all the players in the market that you're looking to play in. And that's where a lot of the real valuable information will come from.
Yeah, that's super helpful, man. I appreciate that. Awesome. And it looks like we have some questions. We got one question. So Adam Pond asked, you said, did Alex incorporate a water sub-reading like rubs at the RV park to improve NOI?
So for water, we pay those, but it is sub-metered for electric. So the tenants do, at the end of every month, we read the meters, and we charge them back for the electric charge. But currently, we pay the water. The RV park is pretty sweet. This is much better than the strip center in terms of how much value we're going to be able to create pretty quickly. It's 109 slots currently. And it's about $150 below market rent for much less nicer parks. Like, ours is brand new. It's all concrete. It's got palm trees everywhere. It's got a pickleball court. It's got a pool, a hot tub, laundry on site with really nice brand new laundry machines, washer and dryer. We're bringing shower facility to the facility. And so it's got all these really nice top-notch amenities, and it's very, very nice. It's the nicest park around. And they're renting out the slots, 109 slots for $500 a month, plus the electric charge back. Now, all the parks around it are renting out for 625, 650, 675, and they're not as nice as ours. And so the moment we go in there, we're going to improve the park a little bit by changing out the Wi-Fi, including that in their rents, which isn't going to cost us much, like $500 a month total. Bring the shower facilities, redo the pickleball court, bring in some, furniture for like the patio where they grill and everything. And we're going to raise the rents by $150 up to market rent, where if they wanted to leave, they could, but they'd be paying the same rate for a much less nicer park. And when we raise the rents on 109 slots at $150 a month, considering the like 10% vacancy at 90% occupancy, we're going to be creating an extra 175 grand in NOI for the property within the first 3 months. And that'll be creating about $2.6 million worth of value within the first 90 days. And so we may look at charging back for water and such, but we want to do it kind of in increments and see what the best play is. But the future plan for increasing NOI there is we're going to be adding 26 additional slots.
Wow, that's super cool. So yeah, break down that deal a little more. That sounds super cool. How did you guys find that deal? And then what was it like kind of getting it under contract and closing on it?
Yeah, so that deal was brought to us by a connection, by a broker. And she didn't necessarily represent this seller exclusively, but she goes out and she cold calls and she's pounding the pavement and looking for deals. And she found this seller, and we got introduced to her by someone in our community, and we talked to her and she sent over the stuff that she had. We identified this one as a very interesting one. Matt and I's partner Robert, he did a lot of the initial negotiations with her and the seller, and it gets even better based on stuff I've told you so far. So what they negotiated was a $7 million purchase price. He had given us bad financials at the beginning. The financials he gave us, I don't even think were adjusted, for this park. I think what he did was he took existing financials from another park he owns and showed us those, but it showed that the NOI was much higher than it was, but we didn't find that out until later when we were under contract. However, Robert negotiated a $7 million purchase price and a $28,000 monthly payment, the seller finance, with 0% interest. So $28,000 a month, 0% interest, $7 million purchase price, and $1.4 million down. Now, that initial negotiation was based on the previous numbers that he had sent us that were inaccurate, but it's such a good deal that the 0% interest in making those payments, even if we did nothing to the park and made no money on cash flow for the entire time that we owned it, over the 5 years that we have this seller financing at 0%, we'd be getting $1.6 million in principal pay down. So simply just by that, we're getting, on paper, 100% return if we decided to sell it after 5 years. But we are going to get quite a bit of cash flow after figuring out the new numbers, which were not too much different, but they definitely weren't as good as he showed us initially. We negotiated a $20,000 payment for the first 6 months to help us come in, increase the rents, and execute the first part of our business plan. And then it picks up month 7 at 28 grand a month for the remaining 54 payments. And then our hope is that by the end of the 5 years, we'll have 5 years to renegotiate these seller financing terms. My hope is that they extend it another 5 years. The 0% interest is just free money, right?
Right.
Now, we did pay him a good price. We're actually probably buying it at about market value based on his numbers, which I don't love doing. I want to come in, below market value and walk into some equity. But the big play is that we are going to create that $2 million worth of value in the first 90 days by raising the rent. So we really are buying it undervalued based on that. And the seller financing is insane. But we bought it with about 38 of our investors, and it's going to be a really great deal for them. They're going to get really great returns, hard to beat based on anything else that they could look at. And this thing's a really sweet property.
That's super cool. I love that. So how did the negotiations go as far as getting him to accept the seller financing terms at 0%?
I don't know exactly because, like I said, Robert did a lot of the initial negotiations. I think that what happened was he had a previous offer for this deal that involved 0% interest. And so when they told us that, we just ran with it and just kept that same trajectory going. So I believe that that's how it happened. And, the guy was fine with doing it so long as we gave him the other terms that he wanted, which was his price and his down payment.
Yeah, no, that's awesome, man. That's a super exciting deal.
Yeah, it's going to be a great deal. It's definitely that and the strip center best deals we've ever bought.
Yeah, no, that's super exciting. And so and you said, is that with your fund that you guys did this deal, or is that with is a group of investors that you guys put together?
Yeah, I mean, we have 3 different things. So we have the initial fund that we did. That one closed down in terms of being able to raise capital. For the strip center, we raised capital. That one closed down, single asset fund. And then this one's a single asset fund. And so I think what we are going to be doing moving forward is just continue to do single asset funds, right? Open it up, raise the capital, buy the asset, close it, move on to the next one, versus an open-ended fund where we have a ton of different properties and it's constantly fluctuating. At least right now, what we're doing is the single asset funds.
Yeah, that makes a lot of sense. So are you, with the single asset funds, are you guys finding the deal first and then starting the fund, or how does that work if someone wants to get involved with the fund?
That's how we did the last couple of times. But the timing is not ideal for that. So moving forward, what we'd like to do is open it up with the business plan of the type of asset that we're going to buy, be able to facilitate raising capital off that. And then once we identify the asset, of course, updating everybody. And that's where a majority of the capital come in anyways. But at least it'll already be set up. The paperwork will be there. The accounts will be opened. And we don't have to wait 3 to 4 weeks after we've put a deal under contract to start facilitating raising the capital, because the timelines are really short.
Right.
And it's quite a process. So I think that's how we're going to do it moving forward. And if anybody's interested in speaking to us about the deals that we're finding, you can just go to trecommunity.com/TR3. We call that company TR3 Capital.
And I will make sure to drop that link afterwards in the chats and in the comments, so you guys can go ahead and access that. But awesome, man. So if somebody wants to start looking for deals like this, or want to start trying to find the bigger deals, what would you recommend they do to start finding deals?
Commit to your knowledge and education, right? Like if you don't know what you're doing right now, listening to all the Kai's podcasts, right? If you have the ability to, go join Kai's community and mentorship program. Go join and be around people who are doing what you want to do, and really commit to your education and your knowledge and also your connections. Tomorrow we're putting on a free commercial real estate investing workshop. It's virtual. Anybody can join that. You can watch, from your couch if you want to. But I'm going to be spending like 5-6 hours with you, teaching you how to find the deals, what to look for in the deals, how to analyze the deals, how to negotiate the deals. And you'll actually get one of these little workbooks too.
Oh, nice.
To walk you through all the stuff, take notes. But I would commit to your education, and commit to your connections. Like go join a community if you can. Go out and go join the networking events. Go find some partners. Go find some brokers. Commit to your knowledge, your education, and also the connections are extremely important that you're going to need to start facilitating buying these deals. But if you start with that, don't get lost in this stuff. Don't get lost in reading books and podcasts. You need to get out there and start taking action. But you go meet the right connections and you make a commitment to meet 5 to 10 people a week that are going to help bring you closer into this world. Then in no time you're going to have everything that you need there to start putting some deals together.
I love that. Yeah. And what's the link for people to sign up for the event for tomorrow?
For tomorrow, it is treuniversity.com/CRE.
Boom. treuniversity.com/CRE. And I'll make sure we drop that on all the channels after as well.
Thank you.
I love that, man. No, it's super exciting. And what time is it, the event?
It's going to be 11 a.m. to like 4 p.m. Central Standard Time.
Awesome.
Spend 5 hours with you guys. Probably do a deep dive into both of those deals that I was talking about. Show y'all, again, everything I said, where to find the deals, how you can start building some true wealth in commercial real estate.
That's super exciting. That's awesome, and can't beat free. So highly recommend jumping on that and learning some cool stuff. So yeah, I feel like you touched on a great point there. Definitely, it's vital getting around the right people, getting around people already doing this in the business and learning as much as you can. But I think you touched on a great point when you mentioned that a lot of times people kind of get stuck in that learning phase and they kind of get like analysis paralysis and never take the next steps. What advice would you have for someone that might be stuck in that learning phase to, kind of get out of that? And what are the most important actions they should be taking every day?
Revenue generating activities are the most important actions that you should be doing every day, like picking up phone calls and talking to brokers, making offers, sending LOIs on deals, right? Like, if there's a lot of, is this in a wholesaling group where most people are specifically focused on wholesaling?
It is. Yeah. That's most of our audience.
Send out 100 offers today and then do it tomorrow and then do it the next day. Call agents, residential or commercial, call the brokers, start making offers, right? A lot of people get scared. They're like, well, what happens if an offer gets accepted? Like, well, that's the goal. That's what you're trying to, that's what you're trying to get accomplished. Reach out to me, reach out to Kai, reach out to the people that you have in your corner. But I've never really been one to get lost in the education aspect because honestly, I get kind of bored. And really the best way that I learn personally is by taking action. And so just walking through that fear, understanding that it's not going to be perfect your first time. Like first time you make a cold call or send an offer, you're not going to be perfect at it. But by the 10th, you're going to be better than the first. And by the 100th, you're going to be better than the 10th. And the more you take action, the more you do revenue generating activities, the more money you're going to make. But I would encourage people to, I know that a lot of people aren't comfortable with this, but I would encourage a lot of people to learn through the action versus learning everything they think they need to know and then taking action, because you're never going to learn everything you need to know before you take the action. Like I'm sure Kai would attest to this, but we're still learning new things every single day. And 50 years from now, I'll be learning new things every day. And if I would have waited to feel like I learned everything I needed, I would have never done anything.
100%. Yeah. I think it's just a fear, because I try to look what's the underlying reason, why people do what they do. And I think it's really just your fear of failing. And, failing's not bad. It's not fatal. It's not final. It's just something you have to do to learn. And like literally the best way to learn, like Alex said, is take action.
Yeah. And I mean, think about it too, like this, right? Like, what's the worst thing that's going to happen? If you sent out 100 offers today and say you sent it out on, 100 single family homes, however you found them, and you sent an offer to 100 listing agents, and let's say one did get accepted. And let's say in your contracts, you're writing in, I don't know, $500 in earnest money and, $50 in an option fee. If one of them gets accepted and it's a bad deal, the worst thing that's going to happen is you're going to lose $50, right? Like your whole world's not going to crash. You're not going to go out of business. It's not going to ruin your life. Whatever you write in as your option fee, that's the worst case scenario that you're going to lose. So, it's not that big of a deal, but, I think a lot of people too in that scenario, maybe aren't so much afraid of the $50, but are more so afraid of looking stupid or in front of an agent or broker or seller or somebody. But who cares? Who gives a shit what these people think about you? Like, this is your life, this is your business. You're trying to build something, and if you're constantly in fear about what other people are thinking about you, you're never going to make it far. And you need to fear and
100%. No, I love that, man. So yeah, I know with residential, you get away with like $10 for earnest money and stuff. What's like the typical earnest money or option period money you have to put down on commercial deals?
it's quite a bit. Like the RV park, we put down 70K. For the deal in Florida, the strip center, you put down $5,000. And don't let that stop you though. If you don't have that capital, just talk to Kai, talk to us, talk to somebody that you can partner with who can help you put money down on a good deal. But all that money was refundable prior to the feasibility period ended. So we had all of our money back.
100%. Yeah, it's a great point too. Yeah, making sure you have the way to get out and get those funds back if needed.
But it's on. But it's unlikely you're going to go talk to a broker who has a good deal and not put down, a good amount of earnest money.
Yeah, I think that just goes back to the point of making sure you're going out and making those connections and going to the events or joining the right groups and getting around the right people, because there's people that literally their whole job's looking for deals, and if you find a good deal, they'd love to partner with you on it.
Yeah, don't let that number scare you. The money is refundable if you write the contracts correctly and you structure the deal correctly. But if we would love to put up that money for people every single day for good deals, right? So just find the right connections, get the right people in your corner if you don't have the capital available, and it's all going back to the beginning. It's all possible.
Yeah, 100%, man. Well, I love that, man. I know I've gotten a bunch of great takeaways. If anybody has any final questions they have for Alex or myself, drop them in the comments. We'll get them answered. But yeah, man, thank you again for coming on. We'll definitely have to do this again.
Thank you, Kai, and thank you everybody for watching.
For sure, man. And so if anyone wants to connect with you further, learn about all the cool things you guys are doing, what's the best way for them to connect with you online or on social media?
Just search for my name, I guess, right? At Real Alex Coffman on Facebook and Instagram. Come see me tomorrow. I'd love to hang out with you guys for 5 hours. Let's build a relationship tomorrow. Come to the commercial real estate investing workshop. It's free. Send me an email, alex@trhomes.com. But we'd love to connect with y'all and do a lot of stuff with you.
I love that. And again, one more time, it's what's the link again? It's Trey University.
treuniversity.com/CRE.
Boom. Let's see if I haven't tried to drop a link in here, but I'll make sure to drop that link for everyone. And I'm going to try to hop on there tomorrow too.
Sweet.
University.com. Someone's in person, because I'm actually going up to Austin tomorrow too.
Nice.
But I should be back in time to hop on at least for some of it. But yeah, no, definitely recommend. I did drop that. I don't know if it's on, I guess it's just on YouTube, but I'll drop it on Facebook and everywhere else. I'm still figuring out this restream platform.
All good. What about you, Kai, before we get out of here? When are we going to do some big deals together?
Hopefully soon. Yeah. I'm going to start focusing on some big deals. Get me excited on this call. I'll start focusing on some. So I'm going to start doing some work and see if we can put some big ones together. I know last I talked to Matt, said you guys were looking for motels down here in San Antonio.
Maybe we have a partner who really likes motels. Maybe he might be looking at something there. Tell me about, I know you're trying to end it, but like, is San Antonio, we've never invested in San Antonio. Should we highly consider it?
Yeah, I think so. I think it's a great city. I think they're adding a bunch of stuff. It's growing. I think it doesn't make sense that it's one of the top 10 biggest cities in the country and be able to buy properties for what you can buy here. And there's definitely a lot of jobs coming here, a lot of things coming, a lot of opportunity. And yeah, I actually lived in Austin before, and I moved down here to San Antonio to start investing here because, like you mentioned, I wasn't thinking about bigger deals back then. And when I moved, I didn't really know much. I was just thinking to the bigger pockets strategy of, doing BRRRR and buying one house at a time. But there just wasn't any cash flow or anything. And, there was, San Antonio made more sense for me, but man, I love it down here. I think it's a great city. I'm definitely happy I moved here, and I think it's a great place to invest.
Cool. We need to look more and start building more connections in San Antonio, but we're looking for 100+ unit multifamily right now, 100+ slot RV, 10,000 to 35,000 square foot retail strip centers, and like 10 to 100,000 square foot industrial. And so that's specifically what we're looking to buy capital. Buy and raise capital for, but we need to start looking more in San Antonio. And so, maybe you're the key.
Yeah, 100%. Yeah, I'd love to do some deals together. And it looks like Alma asked, you said, do you guys invest in raw, undeveloped land?
We do. We have a few development partners. We're actually doing a development in Kingsville, Texas right now, or a redevelopment. And Matt's looking at building some duplexes in Corpus with one of our partners. So we'll look at land, and we also have a team that might have a buyer for the land, even if we're not.
Nice. Awesome. Yeah, Alma's a great person to connect with. She does a bunch of land deals down here in San Antonio too. And I think all the surrounding areas. But awesome. But yeah, well, man, again, thank you for coming on. We'll definitely have to do this again soon. I appreciate everybody for hopping on, dropping questions. If you guys have any other questions we didn't answer, drop them. I'll make sure we get them answered for you. And definitely make sure you go give Alex a follow and go check out that event tomorrow. Again, treuniversity.com/CRE. And I will see you guys on that call tomorrow.
All right. Thanks, Kai. Bye.